And we are live. This is Travis from Tradewithtravis, Carter Capital, and Expert Advisor Reviews on YouTube. Hope everybody doing very well on this Thursday morning. As we go through and put out the disclaimer, I'm going to be able to say we are one person away from being able to hit that 1,000 follower, um, 1,000 following list when it comes down to Trading View. Super excited about that. Been a long time coming, but super excited about that. Let's go ahead and get through the disclaimer. I want to thank everyone that has been watching along the journey. Here we go. So I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from the education, you can be able to make your own informed decision. Understand that trading involves risk. It involves risk of being able to make money. Also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you can end up making money today. So with that being said, what I'm going to end up doing is showing myself onto the screen after I end up getting everything somewhat set up. And then after that, we'll go ahead and get started for as everything goes for us trading today. But before we end up getting started, how did everybody do for us trading? Was it a red day, green day, or was it stay away day? Red day means that obviously you lost money yesterday. Green day means that you made money. And then obviously stay away means that obviously you didn't do anything. For me, yesterday was a stay away day. I really didn't do all that much when it came down to trading, if I'm being very honest. Uh, but it seemed like the positions that we were talking about, they kind of played out the way that I thought they were going to end up playing out. So it put us into a position where we weren't going to end up trading all of that much. I'm going to show myself onto the screen. Hope everybody's doing very well. Uh, and obviously, we'll go ahead and go through the chart. So today, what is happening? Today is the first day of the actual trading month, June. Remember, the summer months, typically what we end up seeing is consolidation. And then from consolidation, you end up seeing breakouts from that. So the vortex way of trading, the being able to trade grid like structures and everything else like that are probably going to end up being the way that you're probably going to end up making most of your money over the course of this summer, unless we just have like a big bull run for the summertime, in which we haven't had really since how Bitcoin ended up moving in early 2020. Uh, when it came down to a movement like that. But retail sales just came out for Germany that actually ended up being good. We ended up having um, harmonized index of the consumer price for the Eurozone actually ended up being negative. President Lagarde ended up speaking a little bit earlier today for that news. A little bit later on, when it comes down to the United States, we're going to end up having ADP unemployment change, and then after that, we're going to end up having manufacturing PMIs a little bit later on today. Going into the second, remember that's what we're going to end up having non-farm payroll. So typically, just like what ends up happening from a trading perspective, the day before all the news comes out, you're probably going to end up seeing a little bit of consolidation when it comes down to most of these movements. So I wouldn't be I wouldn't be too keen on being able to jump in on Thursday as well, unless there's just a major move that we just haven't seen and you got to be able to get into. So let's go ahead and get into the dollar index. Last time we ended up talking about this one yesterday, we ended up saying that the market ended up finding a new resistance at 12,990. And then after that, started to be able to push out. We can see that that ended up happening yesterday. Yesterday, we ended up having a big push. Market ended up pushing up towards that number, and then after that, started to reject. We can see that that happened again today. Started to push back up to 12,990, and then after that, has rejected again. That means that the United States dollar is going to end up showing up as weak, which means that the bulls on the Nas 100 US 30 are going to end up showing out. We'll probably end up seeing that on those charts. So the charts will be a little bit more bullish. Okay, so please keep that in mind. That's the correlation when it comes down to that movement. Now, if we are in true consolidation, then the market is going to end up breaking, or the market will close below 12,950 today. If we're not in consolidation, then after that, I'm sorry, if we are in consolidation, you'll see that it'll break below 12,950. If you won't, then we'll see that the market will have a little bit of a push up today, or at least by the midpoint of today, and then start being able to move back into those midpoint areas of this range that we're starting to see. Uh, Currently, right now, if I'm just let me get this out the way so I can be able to see the chart a little bit better. Uh, okay, my text. Everybody give me one quick second. Just want to make sure I get this right. All right, cool. Um, yeah, going back to what I ended up saying. Currently, right now, we see that obviously this has been a natural support area. And if this will hold, then we'll see that the market will start finding support in this area and then start being able to push back up. I'm not one of those people that like to be able to chase and see if that's going to actually end up being the spot. If obviously if you've been around me, you know that I don't like being able to trade in consolidation. Like I like being able to trade the breakouts of consolidation. It makes it a little bit easier for me from a mentality standpoint for it being able to get. Um, and we end up trading it from that standpoint. But um, this is what we got. We're seeing a little bit of a big move to the downside, but we won't know until the market actually ends up breaking below that point. So United States dollar index market is quote unquote bearish or short term bearish right now. We're going to see how that kind of plays out. Taking a look at oil. Last time we ended up taking a look at oil, well, we haven't took a trade. I think we've only took one trade this year on oil, and I think obviously we've been talking about it since the beginning. Resistance at 82.50, supports at 62.70. That's a new support. Last time it was at $70 per barrel. Um, Market ended up pushing all the way down to the support, and then right now, essentially what happened is that it broke out of that wedge, it retested the wedge, and it's starting to move down to the downside. We're starting to see that oil is starting to have a little bit of a weak move. Now that's not surprising because we're talking about the summer months. Typically in the summer months, you're going to end up seeing that oil will end up being at a price to where if people would like to be able to travel, you can be able to get a little bit of a discount when it comes down to gas prices. And then after that, typically right around July and everything goes like that, it'll start to pick back up because of demand. Um, but right now, we see that the oil prices are starting to fall down. It wouldn't surprise me in the future that the market will pop back up and kind of normalize in this area. I don't think it'll break below and stay below 62.70 for a very long time. Um, Unless we just start seeing that the usage rate of oil is starting to really go down because of what's happening with electric cars. Um, but I don't think that we'll probably see the true benefits of electric vehicles until probably 2025. Um, but here we go. Moving forward, we did that. Let's talk about gold. Gold. I like the move that we end up seeing, but I thought that we're probably going to end up having an upside move off of that yesterday. Did not make a trade off of it, but I still thought that we were going to have an upside move off of that. Here's the plan that we looked at. We've seen that this market was in a purple trend line going towards the downside. It found support at 1950 to 1954. I mean 1955. From there, from a 2 hour perspective, my thing was that I wanted to be able to see the market break out, retest, and then after that started to push up. There goes your breakout. Your retest literally just happened 2 hours ago, and the market is starting to be able to push up right here. So, um, for me, because this market is still in quote unquote consolidation or still back inside of that consolidation range, this will give me a reason to not trade it. But for people that want to be able to trade it, that can really, that obviously like being able to trade consolidation, this market has hit this spot 3 times already previously as support and turned it into another position right here where it broke back inside of that range. So typically when we end up doing trades like this will be a strategy 4 type of trade. Strategy 4 is where you just trade to the halfway point in 1970. Um, and looking at this, unless you're scalping, this is the only time that I would actually end up paying attention to this movement right now. Um, but I think they were 2 hours late, if I'm being very honest. Yeah, I believe that was 2 hours late, being very honest. We had a morning star candlestick happen right here. Here goes the second candlestick that ends up pushing back up. It will get to the halfway point. Once it gets to the halfway point, we'll see what happens from there. Obviously, we're looking at the United States dollar being weak. Because the United States dollar is being weak, then we expect that gold is going to end up getting stronger. We expect that if we trade U.S. yen, that we should be looking at selling. If we're trading Euro United States, then we should be looking at buying. Um, when it comes down to those movements. But right now, I would not jump in it personally because if we're trading a consolidation play, the consolidation play will only be to the halfway mark, and it's not there. My daughter is starting to recognize that we're getting filmed, so she's waving to everybody. Nah. um, let's go. Let's take a look at Bitcoin. From a Bitcoin perspective, the market has had a solid retracement. That retracement um, ended up happening after hitting $30,000, and then after that, rejecting solidly off of it. So typically, what has been an area of where this market has had basically quick run throughs at 25 to 29,000 or 29 back to 25,000. Right now, it's starting to show up as solid consolidation at this particular point. Um, I don't think that we're going to be in this consolidation um, much longer. I'm pretty sure there's going to be some news on the horizon that's going to end up making it either fall down or pick back up inside of an area. But currently, right now, uh, the the point that has to be broken for the market to be able to have a strong bull run is going to be 30,000, and it has to remain to be above $30,000 for at least a week to 2 weeks, and then after that, start to have some type of catalyst of news that's going to make the market move. Currently, right now, we don't have either. The market's at 29.5 or 28.5. This is another area where if you try to get in, it has been a support area for us being able to be in. If you want to lock in some more of your positions, then that would be something that I would kind of suggest being able to look at. Uh, but the true bull run will not happen until the market's above 30,000 and it stays above 30,000 for it being able to move in that. Okay. Let's take a look at US 30, unless there's any questions. US 30, we talked about a bull move being able to happen from the consolidation of this point. Currently, right now, let's go into the daily chart of this. From the daily chart, we're still at the bottom of this support. The market did not go all the way down to the support at 32,600. That has not happened yet. So I still think there's further downside movement, but that downside movement doesn't match up with what's happening with the United States dollar index as a whole from a correlation standpoint. Remember, as I said before, if the United States dollar index is going to end up falling, then what you will naturally see is that the Dow Jones and Nas 100 will start moving. But the Dow Jones has been in solid consolidation pretty much all year, and Nas 100 has been the pair that has been making the biggest move. So if we're taking a look at this from just a trading perspective, let me get that off the screen. We're looking at this from just a trading perspective. We got that 500-point movement last week, and currently right now, the other movement to the downside of being able to trade that did complete its move as well. So you took that trade, congratulations. Um, that move is over with now. Um, but for right now, that is the last thing that I would look at. We got that movement to the downside based off of the low volume nodes, but it made a higher high. We would take a look at this from a trading perspective. That means that to me, that either we're going to start seeing a consolidation wedge start to be able to form out, or we're going to end up seeing a new higher high be created. The way that we truly know that is that if the market goes like this and then after that rejects at the bottom of this support and then starts to being able to start consolidating from there, that's when you'll have a true wedge. You'll start to see something like this. Um, if that's not the case, then we'll start seeing more upside movement from that push. But I think that we're probably going to see a triangle start to form up in the next, probably in the next couple days before being able to see everything push from there. But no trade. I would not put my money into a trade today on US 30. Me personally. Well, all of these are me personally. Nas 100. Let's take a look at that one real quick. That'll be the last one we'll talk about today. Nas 100, last time we took a look at it, we were saying we're looking for a counter trend line break to be able to get in on a buying movement. The next buying movement or the next big move that's going to end up happening will be from wherever this market ends up having a counter trend line break to 15,150. 15,150 is the new resistance that or short term resistance that I would look at being able to go after. personally. Um, Currently, right now, what we have is a counter trend line break that is about to break. And from that counter trend line, about to be able to break, we see a high volume node right here. We have our low volume right here, and then after that, we have our next high volume node. We have basically a M pattern forming right here on this one. Now, a couple things can happen. One, this area right here is a natural support. We can see the market start to pop up, and then after that, start to move. Do I think it will break a new high today? Only reason why I don't think that it'll break a new high today because it's Thursday and it's the day before non-farm payroll. So I think what will happen is that if you are a scalper, if you're a person that's looking this just to only try to get in off of short-term movements, this will probably be a good area to start looking at short-term trades to the upside. Um, and being able to make a move off of that. 2 hours just getting out of the buy zone, that's a good thing. The daily movement has shown nothing more than bullish movement to the upside. That's once again another good thing. The weekly, we talk about what's happening with the United States dollar index. The United States dollar index is showing bearish movement, which means that you're going to see bullish movement up top on this one. Once again, another good thing. And we're starting to see that the move is actually starting to be able to form. So if I'm looking at any move and I'm saying, hey, if we're trading any pair today, what would be that pair, or what would be the game plan for it being able to do it? It will probably end up being something to the equivalent of this. So it'll probably be here. I'll look at being able to buy, put my stop loss just below the swing low. This would be nothing more than a scalp, and um, my take profits will end up being at the top wick of the body of the candles from there. That's a 1-to-1 risk reward ratio, 1 to 1.8 risk reward ratio. Typically, I don't like taking trades like that. Um, that means that our stop loss has to be a little bit tighter. But I can see a reason for being able to jump in off of this trade doing something like this. Anything else above it, I probably wouldn't look at being able to take. The only reason why I'm saying this is because I think that what will probably end up happening is that if we're going to see consolidation, you will see it start to form up, and that was your natural support. So if we're going to trade it, then we're trading it based off of this market hitting that resistance, and then after that, pushing back down. Okay. So naturally, the idea would end up being something to the equivalent of this. Um, Taking a buy may end up having a little bit of a retracement, and then after that, you see the market basically just gradually start to push back up here, and then you start to see sellers start to get into the market here today. The market starts to do something like this, and then after that, either on Friday or on Monday after non-farm payroll, you either see a breakout or you see a push down to the downside. But I think the first movement is probably going to end up being this. Okay. So let's go ahead and get that planned out. Let's see what that looks like from a trading perspective. Uh, get off my screen. Get off my screen. Get off my screen. Get off my screen, please. Why are you here? No. Thank you. All right. Let's see. Positions off calculator. Oh, okay, baby. Let's see. Chart we're going to take a look at on this one be NAS 100. I'm pulling up this chart on my other screen right now. Just give me a second. Let's see. If you market watch, get that off my screen. Chart window. Open that up. Let's go position size calculator. Not that. Oh, come on. I'm sorry. I'm trying to find my position size calculator. Um, Typically, I already have it down here, and I'm taking too long too. Glad this market hasn't made a big push. Let's see. This must be on another chart here. Okay. Kelly, you done been a trooper. Okay, there we go. Let's see. Yeah, what are you talking about? Okay, so here we go. Taking a long trade. Long trade will end up being at market stop loss. If we're doing this, will be just below the swing low. I got 14,210 as a stop loss. Let's see. I'm looking at the right thing. Why does this have 11,000? Oh, okay, cool. Okay. Ah. Okay, 14,288 will be the entry spot. Stop loss will end up being 14,210. Take profit if we're doing this will end up being at the body of the candlesticks 14,488. So I'm going to say 14,480. Risk from 1% of the account. Let's see. Okay. All right. Locking this trade in now. Let's see. No, this one. This is a small lot size play for me. I'm not going to end up doing too much off of this one. Once again, I don't think there's going to be a lot of momentum today. But I don't think that the market's going to fall. I think that the market will pop back up to the upside. I think that it will be up to that halfway point. If I don't like what I see, just fully overall, then I just get out of it in general moving forward. But that's to me, that's going to end up being my move right there. I'm going to end up taking this one for today. So that is locked in. and we'll go ahead and place on the stop loss and everything else now. If you like what I end up doing, please make sure that you end up clicking on that boost button. Also, make sure that, make sure that you end up clicking on that boost button. And then for the people that are watching on YouTube, make sure you end up clicking on that follow button. Over the summertime, gonna end up creating an updated channel for us, the live trading. Just letting everybody know when it comes down to that. But other than that, make sure that you end up planning your trade your plan. I see each and every one of y'all this upcoming Monday after we end up seeing how everything kind of plays out, because obviously we don't do anything on Fridays. Remember, tomorrow 15-minute rules effect. Wait 15 minutes before the market actually ends up making its move before you can be able to do anything. Make everything a little bit easier for you when it comes down to trading. Everybody, take it easy.